Now, today's question has been sent in by Srinivasan. He asks, is it a wise thing to invest a lump sum in sector funds, that to NFOs? I invested in a few NFOs a year back, but they are still negative.
Your experience says it all. It is never a wise idea to be investing in an NFO. Most of the time, NFOs are floated only at a time when it looks too tempting. Investors can be tempted to put their money as if they are missing the bus. And that generally happens to be a phase of extreme rise or surge in value, which is generally followed by a big decline. So that's one. Second is that, when it comes to mutual fund, all you have is past returns. And NFOs don't have a track record.
Yeah.
Third is that, the very primary objective of investing in a mutual fund is to invest your money to gain instant diversification and entrust your money to a guy who will have all the flexibility. You are going to bear all the cost of fund management. And he will not even have the flexibility when it comes to sector or a thematic fund, because his objective is narrow. Why never invest lump sum? More so for a new investor, who is getting attracted to the market or by the markets with NFOs and sector funds. Simply because markets are volatile. They are unpredictable in the short run. And when it becomes generally easy to invest as if you are missing an opportunity, it is normally a time when you should not be investing at one go. So that is why you should never average your investments. Build your confidence. And market is not going anywhere. In the short run, it is unpredictable. Even if you miss couple of months, you will get some opportunity. If you are investing for next 25 years, 30 years, 15 years, 1 month, 3 months, 6 months is not going to make a difference. You should invest lump sum only in one condition, and that too happens occasionally, which I believe it is nearly impossible for most investors to invest at that point. It happens that, the market tanks severely. The market goes down by 30% from its peak. And you think that, okay, it can go down by another 10%, but markets will go only up from there on. That is the time when you should consider. If it is down 25, 30, 40, 50% from its recent high or from an all-time high, it might be worth considering. But it is very difficult to invest at that point, because when the market has corrected by 30%, everybody is too scared to actually venture into investing at that point. That is the time when people are, looking for some recovery to take out money, to put money in deposits. Psychologically, it's a big problem. To overcome that, invest regularly. Do your SIP. Choose a diversified vehicle. If at all you have to invest in a sector fund or a thematic fund or anything, write on paper why you will invest in. And make sure that you are going to invest 5% or 10% of your total money, so that it has some meaningful impact. If you are unable to articulate why you should be investing in that fund for next 5 years or 3 years, and what is the special thing that you should be investing, which other funds don't have, you should not invest. So these are completely avoidable thing: sector fund, lump sum investing, and NFOs.